The one thing that markets hate is uncertainty, and the recent outcome of the UK referendum on the EU has created an uncertain outlook that seems to be growing internationally. The one area that has performed well is gold, bullion, coins, gold producers and gold ETFs. Simon Popple is editor of Gold Speculator, and he joins us now with some more. As an intro, we've spoken to you before about this, and you've laid out your thoughts on this. But we've now got into a situation here where the Brexit vote last week, it shook the markets. But the one constant in this now seems to be gold. Explain first of all about the appeal of gold.
Well, gold always does very well in uncertain markets. It's viewed as a sort of safe haven asset. And historically, when markets have had a downturn, such as 77, 78, and 1987, and also in 2008, gold has done very, very well. And so it's one of those assets that when there is uncertainty, people perhaps have ignored it for a long time, and then they start to look at it, and it's such a small market, even a small amount of demand can have a dramatic impact on the price.
You mentioned some interesting dates here. You brought along some charts to illustrate this. So let's pick up first of all on your point about 77 to 78. Explain this chart that we've got here in the plasma at the moment. Explain what's going on.
Absolutely. Well, this is really looking at the Dow Industrials Index in 1977-78. Clearly you can see there's a downward trend between sort of October and February, where it went down 28%. But over the same period, the COMEX gold went through the roof, up 92%. So clearly, if you had a proportion of your portfolio in COMEX gold, physical gold, then you did very well, while most of the market was in a very firm downward trend.
It's interesting actually, look at the proportions between the drop in the Dow and the rise in the price of gold. There is an inverse correlation there, obviously, by some margin. In fact, what we got to almost at 3 times was the gain in gold that we saw, the drop in the Dow. If we can then switch this onto the second chart you brought along, which shows the October 1987 crash. Dow down 39%, but gold up only 8%. Explain what's going on here.
Well, again, it's a safe haven asset. The rise in the gold price is nothing like as high as it previously was, but it's really making any money in that sort of turbulent time was pretty good. So if you've got your industrial index sort of crashing by 39%. A sort of a return of 8% is pretty rock solid in difficult times.
And what about the most recent crash that we had, the 2008-2009 period?
Yeah, well, again, the trend was clearly down for the Dow. It was down 32%, and the COMEX gold being up 44%. So clearly, if you actually look at the data, going back as far as you want to, every time there's been a significant market crash, gold has done very well. So it really is a good asset for uncertain times.
Before we take a look at a chart and talk about the price itself, which I'd like to do at the back end of the interview if I can, you've also got some more charts which we have spoken about this before, about the demand that's coming through from some of the nations that have been gold hoarders. We know they are. China, Russia, India is another one I know. Explain what's been going on most recently with these two nations.
There's been a huge shift of gold from west to east. And historically, when that happens, the gold doesn't come back. So the gold has really been taken out of circulation. And I brought some graphs over to show you sort of what's happening in China and Russia. And as you can see, there's a huge trend for buying gold. This is China. This is the Chinese Central Bank Reserve, and Russia has the same trend with huge amounts of gold being acquired by the Russian Central Bank. And this gold is coming out of circulation, so whatever physical gold is left, you would expect the price to at least remain firm, and in these uncertain times, I think there's every chance that the price could go up significantly.
The point to make about these two graphs we've just shown is the fact we've seen this big steep rise, but the price of gold hasn't risen that much. Explain more about what's gone on here and why we haven't seen a massive acceleration in the price of gold during this period.
there's a huge disconnect between physical gold and paper gold. I think paper gold to physical is something like about 100 to 1. And up until now, that's been fine with everyone, and people are quite happy trading paper gold. But if the market did start to lose any confidence and actually wanted physical gold, then that's when you'll see the price move significantly. So in these markets where there's a lot of futures and ETFs and things like that, I think people are quite relaxed with things being as they are. But if any of the wheels start to fall off, I think people will want to have physical, or they'll want to have mining stocks to give them more certainty and less counterparty risk than you have with a paper trade.
Okay, let's now bring in the price, because here we are now about the 1300 level. You've got another chart here showing the future potential bubble. Again, going back to previous interviews, we have spoken about this before. This needs a little bit of explanation, doesn't it? Just talk us through what's going on here.
What this is really is a chart by Nick Laird, and what he's done is he's overlaid the current sort of gold market on a previous gold bull market in sort of late 70s, early 80s. And it just shows some of the potential for the gold price. Clearly here he's got the price going to the moon, sort of close to $6,000 an ounce. Whether that happens or not, no one really knows. But all we're saying is the market does seem primed for a takeoff, and I would expect it to at least reach its previous high of around 1900.
Yeah, let's just explain this. Using this chart here, we are in this awareness phase, aren't we?
That's right.
Explain the phases that you've got here. What is the stealth phase, and why has that ended now into this new awareness phase?
Well, stealth phase is really when nothing's really happening. Gold is an unloved asset, and then the awareness phase is when people start to perhaps take more notice of gold, and as you can see, we had the uptick to about $1,900 an ounce, which many people viewed as the bull market, because it was quite a decent run up in the price. We then had a sell-off, which in this graph is viewed as a bear trap, where people thought that's the end of the bull market. Mm-hmm. But clearly it could just be the beginning, and while people are getting out, perhaps the weak hands are getting out, the strong hands, a bit like China and Russia, like I showed you earlier, are firmly getting into the market, expecting a decent run up in the price.
Yeah, just holding on this again, and you're talking there potentially, some people there talking about 6,000 an ounce, but your view is that we are going up from here. But just explain a bit more about the reasons why. Yes, Russia's buying. Yes, China's buying. Gold still does not have any value other than that's applied to it. Why are there not other opportunities for people? New technologies, the pharmaceutical sector, all these sectors coming up with these new technologies, new opportunities, new investment potentials. Why is gold still, as it always has been for thousands of years, something that people want to have?
I think it's a universal currency. So when we have times of uncertainty like we have at the moment, people want to have an asset that is universally recognised. You can't print gold. Physically it comes out the ground. There's only so much that is produced each year. You can't just make gold out of thin air. And therefore people have a sort of a warmth and a sort of a feeling of safety if they have a proportion of physical gold. And so few people have that if they do either invest with physical gold or mining stocks to get direct access to physical gold, then even a small shift in people's investment patterns can cause a dramatic increase in the price.
Okay, all right, well, we'll see how things develop. But Simon, in the meantime, thanks indeed for popping back to give us an update there post-Brexit. That's Simon Popple, the editor of the Gold Speculator.